I like to say that we're a pretty progressive farm and we're always moving forward, and we'll be moving backwards in the coming years.
Dairy farmers across Canada are upset about the new trade deal signed with the U.S. and Mexico. Farmers, including those here in Saint-Eugene, near the Quebec-Ontario border, feel the government gave too many concessions, ultimately impacting their livelihood.
Puts a lot of pressure on us because the price of everything else is going up. I mean, we all know fuel is going up, our machinery costs, everything just keeps going up, and now to be losing market share is difficult.
Access to Canada's dairy market is something U.S. President Donald Trump targeted since he took office. The new deal would give American farmers access to about 3.6% of Canada's dairy market. Terry Heinzel says the deal will take money out of his pocket.
Unfortunately, losing market share will be cutting into our bottom line.
Dairy Farmers of Canada says the industry employs more than 220,000 Canadians and contributes $20 billion a year to the national bottom line.
For the Americans, it's a huge win. And for Canada, it is a loss. It's a terrible deal for Canada. It's a terrible deal for the dairy industries.
The deal will be a tough sell in Quebec, which accounts for half of Canada's dairy industry. And today also happens to be election day in La Belle Province. All four major parties have slammed the deal.
It's a completely uneven, unequal agreement. For Quebec, we would have been better off without an agreement than with this agreement.
Renegotiating NAFTA has been a challenge in conversations with the President, with the administration over these past 13 months.
Ottawa did not give many details, but did say they are working on some kind of compensation package for the dairy industry.
Our supply managed producers will be fully compensated because that is the fair thing to do.
In Saint-Eugene, Ontario, Nigel Newlove, City News.